Should my rent-to-rent business be limited, or should I be doing it in my own name? Let's find out. Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Like all property businesses, rent-to-rent is a great model and it works very well for many people. The next question we usually have when we've decided on a strategy is, do I go limited or do I do it in my own name? Now, it's exactly the same question as any other property strategy. However, let's focus today on rent-to-rent and what is going to be the right option for this business model. Now, it always comes down to two key things when we're looking at things like this, and that is the tax situation and the risk potential. So let's start with the risk and look at, from a rent-to-rent point of view, what are the risks involved in your rent-to-rent business? Now, if you go, well, actually there's very little risk, then this would suggest that you could do it in your own name. If, however, you think, well, if something goes wrong, I don't want it coming back on me, on my personal property, on other assets you may have in your name, then I'd probably be suggesting that you look at a limited company and find out more how you operate through that medium. The key thing with any rent-to-rent business is, because you are working on contracts between yourself and another landlord, whatever structure you choose to use, that you make sure you get the contract drawn up in the correct name. So if you are doing it through a limited company, you need to make sure that you put the contract in the limited company's name. If you do go through a limited company, please be aware that the landlord may also want a personal guarantee in place. Now, I am not one to write a personal guarantee. I'm not one to write a contract as an accountant. That is the job of a solicitor. So make sure you use an appropriate solicitor who will be able to support you in those areas. And it's just something to be aware of, that as well as that contract between the limited company and a landlord, they may want a personal guarantee. So it kind of defuncts the fact that you have the limited company. However, it means that you've not got the issues with the tenants. You just have a guaranteed rental payment to the landlord. So there is added benefit that it can be the right way to go. Now, risk is all very subjective. Some people would see risk where there is none. Others would see lots of risk where there's maybe not as much. So it is very much a personal preference here. You may see that there's no risk in your rent-to-rent business, therefore you can consider doing it in your own name. Or you may have quite a few assets and you actually go, no, I see that if something went wrong, I don't want to find that I am the one suffering, therefore a limited company is the right route. But this is something very subjective and you need to consider what you personally think. It's nothing to do with anybody else, it's your personal preference. Now, tax situation, which is the second side of consideration, is what is your current tax position? What are you looking at doing in the future? Now, when I'm talking about current tax position, it's things like, are you a high rate taxpayer? Are you a additional rate taxpayer? So are you paying tax at 40%, 45% exactly at this moment? So any additional income you receive, you are going to be taxed at the higher rates of tax. Now, if that's not the case, then it probably falls back onto the risk profile and whether you want to do something in your own name or in a limited company. If you're a higher rate of taxpayer or getting close to, so you might be on 40,000 in your current role and this rent-to-rent income will take you into the higher rates of tax, then a limited company becomes definitely a question mark of whether it's going to be the right option for you. Now, as the rent-to-rent model is for higher rates of income, so normally we're thinking probably HMOs, serviced accommodation, some of these different methods, then if you are close to the higher rates of tax, the 50,000, then that would suggest maybe you want to be considering a limited company as well as the risk perspective. Another question that we need to ask at this point is, what is your future plan? What are you looking at doing going forward? Are you looking at staying in whatever other income role that you're doing, so you're still going to have that income even in 5 years' time? Or are you looking at cutting down and removing that income class? If you're removing that income, so let's say you've got a full-time job that you're receiving 40,000 for, are you looking at keeping that job for the next 5 years and therefore that income is going to be permanent income? Or are you looking at actually going part-time or quitting your job in 6, 12 months, 24 months maybe, which means in a year or two, you won't have that 40,000 income. You'll literally just have your rent-to-rent income. Now, if that's the case, then your tax position is going to change, and that intention is quite important, as it might suggest to you that actually you may want to do it in your own name. Now, if that's the case, then that might make the decision for you based on your future intentions. Now, I do appreciate intentions change, life happens, and things go differently. So there is something to kind of be said that is the decision you make today, and in 6 months' time, you may have made a different decision because life has happened. But if you can be quite considerate of what you're thinking, what you're planning, obviously timings can shift sometimes, that you might finish your role sooner, you might finish it later. But what is the intended goal? And this can be quite crucial, because I know we've had a few high rate taxpayers who we put things in their own name because they are literally looking at handing their notice in, which means all of a sudden the tax issue that is currently in place is going to disappear. However, I do want to just highlight, if you're doing HMO and SA, that do remember what income you're expecting to get, because on these sorts of strategies, they are slightly higher income levels, which potentially means you will get back to the higher rates of tax quicker. So it doesn't completely discount the fact that a limited company may be a good option for you. Something I always like to remind everyone is that we're all different with different situations, with different thoughts. So you do need to look at what you're looking at doing rather than what someone else has done, because it may have worked perfectly for them, but it's not the right option for you. If you do decide to go down a limited company route, and then in the future the plan is to buy properties, as you get to the end of your rent-to-rent term, you would be able to repurpose that company to do a buy and hold strategy in the future. Or if you just intend to continually do rent-to-rent, then that works perfectly well as well. So there is a measure of things will change, but that doesn't mean you're stuck in one route. You can tweak things later. Obviously, for all of this, I would definitely suggest having a think how things are going to work for you, and then speak to a professional, an accountant, who'll be able to guide you, ask you any further questions, because some of this very much is a bit of a crystal ball approach, that you have to look at what's happening now, think what you want to be doing in the future, look into the future, and then make a decision. So unfortunately, there's no hard and fast rules with any of this. But if you're asked the right questions, you make all the considerations you can at this point in time, you'll make the right decision for now and hopefully for the future as well. So to summarise what we've briefly mentioned today is look at the risks. What risks are involved in running your rent-to-rent business? Can you do it in your own name, or does it need to be in a limited company to limit that liability? Do you have any issues from a tax point of view that you need to do it in a company because you're just going to be taxed to high heaven? So you need to do it in that approach to keep the taxes down to a reasonable level. What are your future plans? What are your goals? What are your intentions? And depending on this, this may direct the approach that you take. What is your crystal ball telling you? What are you looking to do in the future? And how does that impact the plans that you have now? And then this will hopefully guide you to make the decision that is going to work for you now and in the future. Hopefully today you've discovered whether you should be or shouldn't be limited for your rent-to-rent business. If you do have any questions and want any more information, then please do leave a comment, and we can look at covering any of these as a comment or as a separate video later. Please like the video and do subscribe to the channel. Let's make tax less taxing.